Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about the crash that Bitcoin witnessed down to $103,000 overnight, and we are going to be talking about why this correction may not be done just yet. As you guys know, we have been telling you ever since the day that Bitcoin topped out at $126,000 to stay out of longs. I personally considered buying $30,000 worth of Bitcoin up at $126,000, and I stayed out of it because Bitcoin was showing extreme signs of weakness, and it was also showing extreme signs of having topped, considering we had hit a very long-term uptrending level of resistance. I then told you to stay out of longs all last week, right up until Friday, when we had the massive crash take place, and now I've been telling you guys that we're probably going to have a drop down to $94,000 to $100,000. Yesterday, I told you to stay out of longs once again when Bitcoin was trading at $108,000 to $110,000, and as of this morning, Bitcoin has dropped down to the local level of approximately $103,300. We're going to be talking about what this means for Bitcoin, where we are going next, and how Bitcoin is able to recover from here. So, if you want to understand why Bitcoin is correcting, why this is not the beginning of a bear market, then you have found the right place. So without much further ado, let's go ahead and dive right on into it. Bitcoin trading at $106,000 is a welcome sight to me, and it might not be to you. And I want to talk a little bit about why it is such a welcome sight to me. The reason that this is such a welcome sight is because it's actually now below my one-year average cost basis. My one-year average cost basis on Bitcoin for the Bitcoin that I've purchased over the last year is at approximately $107,000. I dumped hundreds of thousands of dollars into Bitcoin down here, and I dumped hundreds of thousands of dollars into Bitcoin here, and my average cost basis is around 107. I get so excited whenever one of my assets that I hold goes below a short-term average cost basis, because that means I am getting to be into, that the market is moving into extremely strong buying territory, and that's what we're seeing right now is extremely powerful buying territory. I want to go to a clean chart and explain to you exactly why that is the case. You see, Bitcoin has this long-term uptrending baseline of support that we have respected over and over again through the duration of this bull market. We originally saw a major rally here of approximately 200%, and then Bitcoin would see a correction of 27% back down to that baseline. From there, of course, with the inauguration of President Donald Trump, we saw Bitcoin rally all the way up to, it had 106% movement, and then we had a 32% correction. Now, following that bottom down here at 75, we saw Bitcoin rally 66% all the way up to $125,000, and now it is very likely that we'll see a very similar correction, approximately 26%, back down to that exact same baseline. And the funny thing is that each of these levels, the support is $25,000 higher, approximately 1 year apart. We had a drop back down to $50,000, roughly right here. We then had a drop back down to $75,000, roughly right here. And then now we're probably going to see a correction back down to roughly $100,000, maybe a little bit lower, down towards $94,000, which would, of course, fill our CME futures gap, which sits right here. And it would also be a back test of this uptrending level of support. So what I have been saying all week, and basically what we came up with on Monday after the Friday liquidation event here, is that Bitcoin is extremely bearish, and we are probably going to see a candle body drop us down to $100,000, and we might see a wick or maybe even just one body down here below $100,000, down towards 90, excuse me, to liquidate people that have their liquidation prices just below 100. A lot of people think, oh man, my liquidation price is at $98,000. I'm safe. You're not. You need to drive that down below $88,000. Ideally, any liquidation prices you have on very long-term portfolios, you should drive those below $75,000, because there is a possibility that Bitcoin drops down to this baseline, and if that fails, then our next major level of support would be these two levels, this bottom and this high at 75K. This is our current worst-case scenario. Worst-case scenario, we have a drop down to 75. Our most likely scenario, I'm giving an 80% likelihood at this point, is we correct down to between $94,000 to $100,000, and we find massive support architecture there, and then Bitcoin will bounce from there and slowly start rebuilding the rally, and we'll move on up towards price targets such as $150,000 by the end of Q1 next year. Pulling that price target off of, as you can see here, our Fibonacci extension off of this correction. We actually got our October 15th $130,000 price target off of that. Bitcoin got within $3,000 of that. We rallied up to $126,500. And the next price target that Fibonacci gives us is $168,000. Now, the other thing that you can consider is that if you did pull a Fibonacci right here off of the correction that we are witnessing after it completes by drawing from top at 126 down to our bottom at, let's say we go down to 94. If we did drop down to 94, our 1.5 to 1.618 Fibonacci target would be 146,000. Remember, the last time that we drew a Fibonacci like this, it did give us the top of the next rally, right? 127 shows up right there. And if you draw a Fibonacci right here, that's a trade entry, sorry about that. If you draw a Fibonacci right here, then you can see that Bitcoin in this case went to the 2.618 Fibonacci right here. Okay, so the Fibonacci's are very important. And so what I'm anticipating is at some point in the next 3 to 6 months, Bitcoin will bottom out. That'll probably happen in the next 3 to 6 weeks. Bitcoin will bottom out here around $94,000. From there, it's going to bounce and it's going to follow through on the fibs up to approximately $142 to $146,000. And if we just kind of erase all the stuff on this chart here, make it look a little bit easier to see, that basically in reality plays out to a capitulation moving into mid-November down here towards 94 to 100K, and then a slow and sustained recovery moving up into the early part of next year. This is basically what we're looking at. That's what I think is going to happen. It really is that simple. And so now that I've kind of given you my theory of what I think is going to happen, I'm going to get real serious about defending why I'm very confident that this is what's going to happen. First thing I want to mention here is the nuance. The nuance. You got to look at the nuance. You have to do it. You have to understand the nuance. What do I mean? You have to be able to look at the data, and it's whispering at you. The data whispers. It doesn't shout. It whispers. You have to pay attention to the nuance. If you look here at farside.co.uk and look at the Bitcoin ETF inflows, I want you to notice something. When Bitcoin was extremely bullish 2 weeks ago, I mean, right here, right? Rallying from 108 to 126. When we were extremely bullish right here, look at the inflows. 1.2 billion on October 6th. 1 billion the day before on October the 3rd, that being the Friday. 600 million, 429 million, 500 million. Those were the inflows that we were seeing as Bitcoin was going through, cumulatively, a $17,000 rally. We saw inflows totaling several billion dollars, probably like $5 to $10 billion over the course of those 2 weeks. I mean, we can even see it here. From the beginning of September to the end of September, we saw approximately $7 to $8 billion worth of inflows into Bitcoin. Right? And now you are seeing the largest capitulation event in the history of Bitcoin drop Bitcoin 18%, $22,000 in 4 days. And now we're right back down here. We're still 18% retrace from all-time high on that candle wick. And notice what's going on with the outflows from the ETFs. A measly 500 million outflow. And most of that's out of ARK-BTC, right? That's barely anything coming out of IBIT. Whereas IBIT was having $1 billion a day of inflows, $800 million a day of inflows, $500 million a day of inflows. Bitcoin is seeing one of the most bearish 2 weeks that we have seen in years. And on BlackRock, we've got $30 million of outflows, where the bullishness, we have $800 million of inflows. So you're telling me, let me get this straight, that the ETFs, which are mostly held by Wall Street bankers, 401ks, Roth IRAs, long-term positions, see 20 times as many inflows on the bullish days as they do outflows on the bearish days. This is the nuance that you're looking for as a technical analyst. This helps you to understand the strength of the bulls and the bears. There is no argument for a 75 to 80% bear market right now. None. A lot of people wanted to say we're going into a bear market. Depending on how you define the term bear market, I could agree or disagree with you. If you define a bear market as something that's going to take 18 months and it's going to drop a 70%, which is what we've seen in past, I completely wholeheartedly disagree with you. There's very little possibility that in 18 months from now, in like February of 2027, Bitcoin's at $30,000 a coin. That is extraordinarily unlikely. Ridiculously unlikely. And anyone saying that has no technical or fundamental backing for that whatsoever. That is asinine. On the other hand, if what you mean by bear market is that the 4-year halving cycle is dead, long live this uptrend, and the bear market is simply us returning back to this uptrend as we've done many times recently, then sure, you can call that a bear market if the bear market bottom is 94. If worst case scenario, the bear market is 75. And I want to talk about that term bear market because it's very interesting. This is not treated like a bear market by the institutions. Retail is treating it like the bear market. We like to think that, oh, we're not retail. Yes, we are. You got less than $20 million, you're retail. Retail, the leverage traders, everybody on X is treating this like a bear market. Institutions ain't selling. They're selling a little bit yesterday, right? On Thursday. Yeah, they sold some, but they're not selling big time. Their sells, their exits are nowhere near as large as their entries because people believe in the long-term longevity of Bitcoin. And so let's also talk a little bit about gold. Gold is absolutely exploding. Let's start here on the spot price. Gold has absolutely exploded in value from $3,300 all the way up to $4,400. Recently, we rallied up to $4,400, just shy of it. We almost hit $4,400, right? This is the largest rally that gold has witnessed in over half a century. The last time we saw gold sitting at this high of a level on the RSI was in 1973. Following that rally up to that level on RSI back in 1973, gold would go through about a 5-month correction, and then, of course, it would go on to march higher. I do firmly believe that by the end of this decade, gold will be trading at over $10,000 an ounce, and that is something that I posted on my Twitter. I bookmarked it, and I'm going to be reposting it in 2030, right? I do also, by the way, firmly believe that gold needs a correction. I made this prediction recently. Sometime within 3 to 6 months, gold will correct for 3 to 6 months. And after our tweet of staying out of longs yesterday at 108, which I hope you listened to because we dropped down to 103. If you were in a long trade, you almost certainly got liquidated. We also posted that gold is going to have a correction. It's going to have a correction. I don't know where I posted it. It's in here somewhere. There's a bunch of predictions back here, but there is a post in here somewhere saying that gold is going to have a correction. And the reason that it needs to have a correction is because it's gone through a massive rally. In fact, it's my latest tweet. Gold is in a bubble and will correct for 3 to 6 months starting soon, probably starting before December 1st, 2025. That is because gold just simply cannot sustain the kind of hype cycle that's going into it. The amount of buying that's going into it is going to have to cool off. And that leads us to these two charts that you've probably seen a lot of, XAU BTC and BTC XAU. Now, here's the thing. If you chart gold over Bitcoin, you can just see that, man, it just looks like Bitcoin is getting eviscerated. Look at this massive rally. This is just showing that gold has massively outperformed Bitcoin here on the daily chart. And there's just no other way around. That's just the daily chart. Yeah. This is the long-term history of gold against Bitcoin. In mathematics, you would call that an asymptotic regression to zero. In other words, the value of gold against Bitcoin has approached zero for the last 15 years. Zoom in just to the last 5 years. In the last 5 years, gold's value is down 78% against Bitcoin. So yes, if you doctor the timeline and you only look at the last couple of months, absolutely gold is outperforming Bitcoin. But that's not going to last. That's not the trend because Bitcoin is superior. By the way, we also need to look at this chart. You've probably seen this one, right? You've seen the flip side of that chart, which is the gold over Bitcoin chart. This is the value of Bitcoin denominated in gold. And you can see that we are still actually below the value of Bitcoin as we were at the top in 2020 and 2021. This is a very interesting dilemma that you find. Why is Bitcoin not performing better against gold? I would say to that, it's working on it. That looks like a massive inverse head and shoulders pattern to me. By the way, if you look at the 3-daily chart, everybody's talking about this head and shoulders pattern forming on gold, which could cause Bitcoin to drop more so against gold, which probably will happen because gold might go up to $5,000. Bitcoin might go down to 94. The distance between the two may increase. Sure, Bitcoin might drop down. Bitcoin over gold here might drop down to, for example, like 20. We're at 25 right now. It could very easily happen. But what I say is that will not last, and that the further away Bitcoin gets from this high right here that we set in December of 2024, the more the difference between those two becomes, the better the investment in Bitcoin is. I need to go back to the very basics of technical analysis. When you go through CMT, you actually realize that this is part of the definition of technical analysis. CMT is the Chartered Market Technician certification pathway. It's kind of like a CPA, but for technical analysis. When you go through that, you realize that one of the basic definitions of technical analysis is understanding a market's intrinsic value. And the way that you understand a market's intrinsic value is by differentiating between the fair market value and the nominal market value. What is the price of the asset, and what should the asset be valued at? I firmly believe, based on a plethora of fundamental and technical reasons, that Bitcoin should be valued significantly higher in relation to Bitcoin, into gold, than it is. And gold is massively exploding up to $30 trillion in market capitalization. So if Bitcoin is 8% of gold's market cap right now, I think it should be 30 to 40% of gold's market cap, which leads to linear price targets in the future of $300, $400, $500,000 a coin within the next 3 to 5 years. But you also consider the fact that the top line, which is the overall market capitalization of gold, is rapidly increasing, which drags those price targets up even farther. Let me rephrase it another way. Looking at technical analysis, you try and figure out what is the spread between the actual nominal market value and the fair market value. As gold rallies higher and as Bitcoin drops lower, the spread becomes larger. And the larger the gap between the fair market value of an asset and the nominal, the dollar value of that asset is, the better the investment it is. And so that shows up on this chart right here, because I think the fair market value of Bitcoin really ought to be plotted against gold. So literally, as Bitcoin drops here, everybody's freaked out about this head and shoulders pattern on Bitcoin over gold. I say, great. The lower this chart goes, the better the entry you're getting on Bitcoin. I wish this would drop down to 20. I wish it would drop down to 18 or 15. I would love that. That means that everybody is underestimating Bitcoin, overestimating gold, and the rotation will be even sicker. And so if you want to build wealth in the cryptocurrency market, you have to stop doing this nonsense of saying, I want to ape in up here. Believe me, once again, I have my finger on the buy button. I almost bought $30,000 worth of Bitcoin up here. I decided not to. I said, nah, I'm good. I'm going to hold off. I'm going to wait for a correction because Bitcoin is really looking like it needs one. And as much as I wanted to ape in and be emotional and buy 30 grand worth of Bitcoin up there, I'm going to hold my horses and I'm going to wait for a better entry. And I'm glad I did that, because we are probably going to see a regression back down to this baseline. From there, after we have that correction, then we'll be able to bounce and rally. Now, as we kind of come in towards the end of the stream here, the end of the video here, I want to go over a couple of reasons why I do not believe that we're going into a traditional 4-year bear market. First and foremost, traditional 4-year halving cycle bear markets, where you see them in Q1 and Q2 of the even number year of, for example, in this case, it'd be 2026. They don't make any sense because you didn't have the blow off top. Typically, in a bull market, you see a blow off top where Bitcoin goes like 1,000% rally almost immediately. You never saw that happen in Bitcoin this time. You've seen a linear growth, right? You can see here, this is parabolic growth, right? The banana mode kind of thing. Bitcoin is in linear growth. On top, and so for that reason, Bitcoin doesn't need to have this gigantic crash. It just doesn't need it. There's no reason for it. The second reason is because gold rallying this much proves to us that the spot price of Bitcoin is most likely going to go higher because people are having a crisis of confidence in fiat currencies. And as they do so, as Bitcoin goes lower, it's going to become a better and better entry. So that'd be the second reason I'd say that Bitcoin is not going into a traditional bear market. Third reason, Bitcoin still has enormous levels of support. We have supported 100,000, which might break, but it's still there. We have a CME gap at 93 that if it gets filled, most people would consider that a good entry and they would be buying down there. We also have this uptrending level of support, which is the 20 monthly exponential moving average. It's sitting at $88,000. A back test down to this level is very, very much possible. All of these levels would not cause Bitcoin to go into a bear market. All of these levels would present themselves as excellent buying opportunities for investors. Investors like myself would not consider Bitcoin in a bear market unless we sustain trading below $90,000. If we hold above $90,000, then that is simply an extremely good entry. And so in my opinion, I do not see Bitcoin going into a bear market right now. I see Bitcoin as simply regressing back to the baseline, and we have to be careful about thinking that past results are going to guarantee future results. We have to be careful about saying that the 4-year halving cycle Bitcoin bull market and bear market has happened 3-4 times now, so it's obviously going to happen again when the fundamentals and the technicals are shouting at us that this uptrend, that institutional adoption, that the growth curve on gold are all what is actually driving this market, along with runaway M2 inflation, along with rate cuts that are coming. We're going to have one later on the end of this month, along with the Trump family being very pro-Bitcoin. They don't want to go into the midterms with Bitcoin's price being down. The midterms are right at exactly where you would predict the Bitcoin bottom to be based on the 4-year halving cycle bear market. You would expect the bear market to be hitting in November of next year, right when midterms are happening. Why would Trump, who ran on being pro-Bitcoin, allow Bitcoin to be at $40,000 or $50,000 right as half of Congress is getting reelected? Why would he do that? That's not going to happen. We already know that the guy can manipulate the market. It happened last Friday. We're not going to see a massive bear market down to 30 grand. We need to stop worrying for that. We need to be prepared for it. I'm prepared for a bear market of $30,000, but I'm not worried about it. If we drop down into the 90s to 100s, I'm buying like crazy, and you can either join me or you can get left behind. These are excellent once-in-a-generation opportunities, and I firmly believe that at some point within the next 12 months, Bitcoin is going to leave behind the five figures forever, and we will never again wonder if Bitcoin will ever drop below $100,000 because we're going to blast off to 150, 200, 300, 400, 500, and by the end of this decade, you're going to see Bitcoin trading between $500 and $1 million. If that's not an excellent investment, I just simply don't know what is. If you enjoyed today's video, hit that like button, subscribe to the channel, and stay tuned for more content. And if you would be interested, make sure to check out our financial coaching. It is currently 20% off with the link in the description box down below. I would love to sit down with you and go over your finances and help get you on the right path financially. Make sure that as you are running hard, you are running in the right direction, because if you're running in the wrong direction, you can run as fast as you want and you're never going to get there. So make sure you check that out with the link down below. If you want to learn how to do technical analysis from a master technical analyst, myself, then you can sign up for the Cryptocurrency Technical Analysis Academy with the link in the description box down below so that you too can learn how to do technical analysis on markets. And you can get CT2A off for 20% off right now by using the link in the description box down below, coupon code JEB20. Over there, you're going to get access to over 14 hours of content, over 60 videos teaching you exactly how to do technical analysis. I hope you enjoyed today's video. If you did, make sure to give it a big thumbs up. Subscribe to the channel if you're new here. We're rocketing off to 250,000 subs. I think we'll be there next month. So make sure that you go ahead and join our cause, because next stop, 500K. Love to see you guys up there. And before I go, I love you. And I do just first want to thank each and every single last one of you for watching. As always, and I will see you guys in the next video. Peace.